All right, everyone, here we are with ticker symbol WKHS, Workhorse Group Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So Workhorse has actually broken through the lowest point that it reached in this bearish run of 1813, and it's hit newer lows to the point that when we go all the way back, it's already on its way closer to that $16 mark that I've talked about. And if it breaks through that, we would have to look way down here at that 14, slightly all the way down to $13 of range to see what's going on and where this is probably heading. Right now, that $14, $13 range is not big of concern. The next one is 1683, so we're not that far from it. We're about 30 to 40 cents away from it right now with the new lows, but this is hitting newer support levels as we've been speaking each day as it goes on. So we're going to move this to its new location, and we're going to see what is important for tomorrow. If it breaks through support, this is going to see newer lows. We are deeply in bearish territory, and the 50-day moving average is way up here at 1912. I'd write that down. As long as we're below it, the bears are in control, and the moment we're above it, the bulls are in control. Now, our resistance is the highest point before this fall. So if the bears continue to dominate this, they're going to want to break through support. And that support level is not that far away from our current price. It's at 1710. Support is 1701. Literally $17. 9 cents away, 10 cents away. Literally. That's how close it is. And that's our support. If that gets broken through, the bears are going to pull this further away from the 50-day moving average and pull it down further into bearish territory to newer support levels and newer lows. So it's super important to keep in mind how this is reacting and how quickly is this moving down, because then our next point of reference is right around here at 1683, 1685, give or take. It's not that far away. It's literally 20 cents to 30 cents away if you look at it from anywhere from the 20 cent range of obviously 1680 all the way to the 30-cent range of around 1670, give or take. But right now, those aren't the numbers to be aware of, but keep those numbers in mind. If it continues and it breaks through 680, 675, this is pulling quite further away from the 50-day moving average and getting deeper into bearish territory, giving more control to the bears. But right now, the most important support level is 1701 before getting to those numbers. 1701 is super important. Pay close attention to the behavior. Is it going to be used as support, or are the bears going to bring this one down fairly quickly? On the other hand, we have what the bulls want. They need to break through this. They want this, and they need to work their way up closer to their goal. And that is 1912. 1912 is the 50-day moving average. Once that gets crossed, we are now in bullish territory. Now, this resistance level is 1881. We're literally a whole $1.71 away from that. So the bulls have to come in hefty and strong, load up on stocks, and bring this one back up. There might be bulls that think that if this breaks through support or kind of hangs out around it, 1710, 1720, or 1690, give or take in that range, it might be a discount, load up on stocks, and bring this one back up. I'm not saying that the bears have completely destroyed this chart, but you have to monitor how this is acting if it breaks through this support level of 1701 as it gets closer to it, or how it's hanging out in this area, give or take 10 cents less than the support or 10 cents more than the support. But back to this resistance. The bulls need to break through this 1881, and that does not signify that the bulls have gained control. That's just the first step and indicator for us investors to know where this is heading and how the bulls are getting closer to their goal of getting back into bullish territory. So super important for the bulls. They need to break through this, but it doesn't signify they've gained control just yet because we're still in bearish territory. They need to break through 1881 and pull away from it by turning it into a support. As always, I hope that with these cues, you guys are well equipped for tomorrow's trading day. If you feel encouraged and inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens. For the most part, not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how We bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you are going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.